SEC Chair Paul Atkins made huge statements today about crypto rules that are coming very soon and opening up the IPO market for 2026. This bodes well for the continuation of the crypto bull market. And Bank of America has capitulated following Vanguard telling their wealth advisors to tell their clients to invest in Bitcoin and crypto. I'll give you the details. Let's get into it. Hey everybody, welcome into the Thinking Crypto podcast, your home for cryptocurrency news and interviews. I'm your host, Tony Edward. On your way in, please hit that subscribe button as well as a thumbs up button and leave a comment below. If you're listening on a podcast platform such as Spotify or Apple, please leave a 5-star rating and review. Folks, Bitcoin is on the move. It is currently near $93,000. Now, this should come as no surprise because we've been talking about the extreme fear sentiment, right? Everyone thinking the top is in, that's it, it's over. And Bitcoin being in the oversold zone, the RSI in the daily chart showed we were oversold. So the natural direction of the market is to do the opposite of the herd and what people are saying. But the big question, as we've been talking about, and I actually wrote about it in my newsletter today, and that is this just a relief rally, a dead cat bounce, and they will roll over to go into lower lows into a bear market? That's a possible scenario. Or is this the start of the continual move from a what could be a local bottom once again, and we continue to new all-time highs? So those are the two scenarios there. No one has a crystal ball. No one has a time machine. So we're just looking at the chart and looking at the data and seeing what can play out here. And obviously this is all probability. So we want to look at which has the higher potential to play out. Now on the weekly chart, Bitcoin, of course, seeing a green candle here, but the bears are still in control, but they're losing some momentum on the MACD. So I expect that to continue and to have the MACD flip bullish. However, the monthly chart is the challenge because that is flipped red on the MACD. And that's not a good sign because historically, that is the end of the bull market, right? That we are rolling into a bear market. However, if you look back at the chart, it's specifically around 2018 to 2019, we had the flipping of the bears to the bull, then quickly back to the bears. So could something like that play out again? It's possible, right? It doesn't mean everything has to play out the same in every cycle. And I think certainly this time around, we are seeing some differences. For example, Bitcoin broke all-time highs before the halving. That was because of the Bitcoin ETF launch. You have the ETFs buying significant amount of Bitcoin. Plus, you have the digital asset treasury companies like your MicroStrategies, your Meta Planets, and others. So there's more liquidity, more holders, and so on and so forth. So could this 4-year cycle have some deviations and new updates to it? Sure. We're going to have to wait and see. We got to get confirmation here. So could this MACD flip back to bullish and the bull market continues? Sure. But right now, history is not on its side. So I don't know what's going to happen here, folks. There are a lot of conflicting things here because I see certain things on the charts, but yet the macro and all the things we're seeing, adoption, what the Fed is doing, and much more, is pointing us to a bull market continuing. So we are going to have to see, is it maybe Bitcoin is not going to do that well this cycle, but altcoins are going to catch up once the market structure bill passes? Once again, that's speculation, but it's a possible scenario, but I think we're going to have to wait and see. It is certainly uncharted waters here. Now, speaking of the Fed, by the way, the Fed has officially ended quantitative tightening. That ended yesterday. And look at this. They did not waste any time injecting liquidity. So the Federal Reserve pumped $13.5 billion into the U.S. banking system through overnight repos. This is the second largest liquidity injection since COVID and surpasses even the peak of the dot-com bubble. So this is kind of like stealth QE. It's not full-on QE, but oftentimes they will do things like this, inject liquidity where needed, and they won't call it QE, they'll call it some different name or whatever it is, right? But any type of activity like that does make its way to the market eventually. And Kalshi right now says there's a 91% chance of a 25 basis point cut in December. So the odds of the rate cut this month is up. Same thing with the CME Fed Futures watch. So you got liquidity injections, and then you got rate cuts continuing. So all this bodes well for the market. Just the charts are saying one thing, but the macro is saying something else. So that's where we got this interesting dichotomy, folks. And look at this. SEC Chair Paul Atkins today made the rounds. He was at the New York Stock Exchange. He was at the NASDAQ as well. He was on CNBC, and he made some very big statements. Here are some of the statements he made. He says innovation exemptions for crypto firms is coming in January. So he hinted that the government shutdown slowed things down, and now they're ready to release this stuff. And this is in addition to the market structure bill. He also said they are ready to kick off policies in the new year to boost IPOs. I've often told you guys, who the hell does an IPO in a bear market when liquidity is drying up, right? It just doesn't make sense. And there are a lot of crypto companies that are looking to go public, like Securitize, Grayscale, Kraken, and others. So what's happening here? Again, the dichotomy, right? The charts are saying one thing, but the macro is setting up here. And this it's not just rumors. These companies have filed with the SEC to go public. So that's where I'm scratching my head like, wait a minute, why the hell would they go public when the market's tanking and we're losing liquidity and there's nobody here, no retail, right? So something is weird here. Plus, you got the market structure bill setting up. Now, let me play some comments from Paul Atkins' interview on CNBC.
Can you do what needs to be done with crypto without legislation? And do you think that can happen before the end of the year?
I'm looking forward to having an innovation exemption that we've been talking about now. We'll be able to get that out in a month or so is what I'm hoping. We were impeded a bit by the government shutdown. Obviously, we couldn't work on things during that time, but we're on track and we will be able to forge forward with the crypto area and make sure that we are able to embrace this new area of innovation that for too long the United States basically has just pushed back against. And so I'm looking forward to having rules that are focused on helping that sector of the economy move forward.
So you see, you're getting these bullish statements from Paul Atkins, and they want to open things up and IPOs and much more. And he's at the New York Stock Exchange. He's at the NASDAQ. And it's like, man, this is so strange, right? And then you got the ETFs that have been going live. But yet, like I said, the charts are still showing some worrisome signs. And in addition, we are seeing some of the biggest capitulations and adoption of crypto, right? So we just reported yesterday about Vanguard after saying they will never offer ETFs. Now they offer Bitcoin, Ethereum, XRP, Solana ETFs. And look at this, Bank of America is following suit. Bank of America greenlights wealth advisors to recommend up to 4% Bitcoin allocation. And guess what? They said this is starting in January. So what the hell is happening, guys? The bank advisors will initially focus on 4 spot Bitcoin ETFs, including BlackRock's IBIT and Fidelity's FBTC. This move aligns Bank of America with other major institutions like BlackRock and Morgan Stanley, increasing pressure on holdouts such as Wells Fargo and Goldman Sachs. Guess what? Wells Fargo and Goldman Sachs will eventually bend the knee. But guys, look at the timing of all this. You would think these things would happen right before the top, right? What maybe the case is we will see Bitcoin maybe not go that high, but it will pump aggressively, and altcoins will follow, and then we have a blow off top. It's just a weird time. I'm trying to make sense of it and looking at the data, not to be emotional, but I hope you understand what I'm trying to say here. I'm trying to show you the full landscape of the possibilities and what's happening on both sides, right? I'm not ignoring the bearish signals. I shared the Bitcoin monthly chart. The other thing I shared in my newsletter today, folks, was that the Bitcoin whales, they have been distributing the wallets with 10 or more Bitcoin. Now, that in itself does not signal the market top is in, because we saw that throughout this bull market. In fact, after Q2 2024, there was a massive sell-off, right? I think many of you recall the buy the rumor, sell the news event. Bitcoin went to 70-something thousand, and then we had a huge dump, and it was huge whale distribution on that news, right? A greater decline than what we're seeing now, but then they started accumulating and the bull market continued. Same thing could happen here, but this is not a positive sign, if you know what I mean. It's been in over a month of decline here. So we want to see a reversal, that these whales start accumulating. So I'm going to keep refreshing this data every day, but I hope you understand what I'm saying. We are seeing just some conflicting things here. It is pretty wild, but look, we got to go with it. This is the nature of markets. I am still leaning more on the bullish side because of the macro. But I am not ignoring the bearish side, right? And you may disagree with me and say, hey, Tony, you know what? I don't agree with you there. I'm leaning more to the bearish side. And that's fine. This is why you each do your own research. I'm just here to present different cases to you, different scenarios, and we try to figure this out together. But this is a pretty weird time, right? Because once again, you got this dichotomy. Folks, this episode is brought to you by Trezor. Trezor makes beautiful hardware wallets that make it easy for you to safely store your crypto assets. Now, Trezor were the ones who created hardware wallets back in 2013. So they started it all, created the seed phrase setup and much more, and then other competitors came along. So they have an incredible pedigree, folks, and their hardware wallets are open source. So the code is out there for anybody to review. That's how much they trust what they have built. And they've recently launched a new device called the Trezor Safe 7. I use that device. I also use the Trezor Safe 5, so I'm a user of the device. And folks, they support all the major tokens, including Bitcoin, Ethereum, XRP, Solana, Cardano, Dogecoin, everything for the most part. And they also support new coins like BlackRock's BUIDL. And they have a software suite called Trezor Suite, which helps you to manage all of this, and you can buy and sell within that platform. And they also have a hand-holding service. So if you want to get help from a Trezor rep to set up your device, that service is available. Don't worry, they don't ask you for your private keys. So Trezor offers a lot of amazing products and services. And folks, they have a Black Friday sale still going on. It ends tomorrow, December 3rd. So you can get huge discounts up to 40% on certain devices. So check it out. Great sale happening here. And, you know, self-custody is the best way to safely store your assets, right? Where you control the keys. So if you'd like to learn more about Trezor, visit the link in the description. Now look at this, folks, coming out of the UK. So UK law now officially recognizes digital assets. The UK has today taken an important step forward in recognizing the role of digital assets in the modern economy. A new law has come into effect, confirming that qualifying digital assets, including crypto tokens, stablecoins, and NFTs, can be treated as property under UK law. This is incredible, folks, and we are seeing globally clarity, the rules and the guidelines, the guardrails being put into place. Yes, they're going to tax it, but they're not banning it like people have been saying for a long time. The governments are not going to lie. They're going to ban it. It's going to die. Bitcoin's going to die. No, this is the future. This technology, as I've been telling you guys, will power the governments, the economies, and the markets. So this is really great and very bullish. And once again, we're seeing it happen globally. Here's another example. Japan has said it will implement a flat 20% tax on cryptocurrency gains. So that's pretty good. I wish the United States would do something like that. So regardless of your income level, you know, they'll tax you at a certain rate. Obviously, the lower the better. I believe capital gains tax is highway robbery by the government. You take your already taxed money, you invest it, you make gains, and the government comes and takes a big cut of it, right? I think many of you agree with me on that, but look, it is what it is. Now look at this news. Taurus taps Everstake to expand crypto staking options for banks and institutions. So the infrastructure being built for these massive institutions to participate in crypto. So the deal folds Everstake's validator operations into Taurus's regulated custody stack, giving banks a way to stake without shifting control of their assets. The move comes as institutions look for compliant staking infrastructure beyond the largest networks, with Taurus continuing to broaden its on-chain services after its recent US expansion. Very bullish news. Look at this. Kraken adds backed finance to 2025 acquisition streak, brings X stocks in-house. So we all know Kraken is looking to do an IPO, and they're tokenizing stocks and looking to expand as much as possible. So US-based crypto exchange Kraken has agreed to acquire Backed Finance AG, the company behind the issuance of X stocks, adding to a string of acquisitions the exchange has made this year while bringing the tokenized equities platform under its roof. According to Tuesday's announcement, Kraken plans to integrate X stocks issuance, trading, and settlement more tightly into its products, including its global money app, while expanding support to additional blockchains and markets. X stocks is a platform that issues tokenized versions of publicly traded equities, such as stocks and exchange traded funds. It currently offers over 60 tokenized products and has recorded more than $10 billion in combined exchange and on-chain volume since launching earlier this year. The tokenized assets are live on Solana and Ethereum blockchains. So again, you want to look at where are these things being tokenized on and make sure you hold the tokens of those said blockchains, right? As you're doing your research, and obviously there are other factors to consider, but adoption, real world adoption is very important. I do hold both Solana and Ethereum in my portfolio. And look at this news moving ahead. Group of EU banks pushes for a euro peg stablecoin by 2027. So all the banks and major financial institutions, the stock exchange, are all on board, folks. They know that blockchain infrastructure will power the markets and the economies. So a group of 10 banks plans to introduce a euro peg stablecoin in 2026 under an entity authorized by the Dutch Central Bank. In a Tuesday notice, BNP Paribas said it would join 9 other EU-based banks in an effort to launch a euro-backed stablecoin in the second half of 2026. The Amsterdam-based entity formed by the banks, Quivalis, if I'm saying that right, will launch a stablecoin compliant with the region's markets in crypto assets MiCA framework, subject to regulatory approval. Here's a quote: "A native euro stablecoin isn't just convenience, it's about monetary autonomy in the digital age," said Quivalis CEO Jan Oliver Sell. He continues saying here, presenting new opportunities for European companies and consumers to interact with on-chain payments and digital asset markets in their own currency. Now, when you have a group of banks that are building a stablecoin, you got to watch out, because that, I believe, is like a pseudo CBDC, a central bank digital currency. And it's just coming under a new skin or name or look and feel. But, at the end of the day, all these banks are plugged into the central bank and they're all using the same stablecoin. Again, it looks and smells like a CBDC. So it's not necessarily that CBDCs are bad, but it just opens up the door for the governments to manipulate it. And while it may not happen now, we got to be vigilant, because it's, at any point you give them that power, someone comes in, they abuse that power, and then they can use it nefariously, right? And silence you, turn your money off, program it so certain people can't use it. So look, let's look at history, right? Human beings are going to be human, right? And we've seen what absolute power and all these things can do and corrupt people and all that, right? So anyway, I don't want to get off on a tangent, but I hope you guys understand when I say you got to be vigilant, you got to watch out to see what the rules are, how are they, is it compliant with, the constitutions? And look, this is talking about the EU. I'm here in the United States, and we have heard about, some collective stablecoin by some of the big banks here, but I think people are going to fight it here with the U.S. Constitution. But at the same time, still got to be vigilant. You never know. And we got to watch out for these things, that they don't abuse our rights or steal our rights, guys. But as you can see, all the banks, all the stock exchanges, all the central banks, all the governments, they are on board to build with this technology. Folks, that's the news. Let me know what you think. Leave your thoughts and comments below. Hit the thumbs up button. A great way to support the podcast is by subscribing to my free email newsletter. Like I said, I put out a write-up today, so check it out. Also, check out my book on Amazon. It's available in paperback and digital, and my course at mycryptocourse.com. This is a comprehensive course that teaches you everything you need to know about crypto. So check it out, folks, if you want to expand your knowledge about crypto. Thank you so much for tuning in, everyone. I appreciate you all, and I'll talk to you all later.